Hey everyone, welcome back to Corporate Decoded, the place where we decode the financial jargon to give you the real story behind company filings. Now today we are looking at Moleculin Biotech Incorporated MBRX. And let me tell you, they are making some rather significant changes to their stock structure. Buckle up everyone, because this usually means big moves are coming. If you want more of these straight to the point breakdowns of important financial documents, make sure you are subscribed and also join our thriving Discord community linked in the description below. Alright, let us dive into this SEC filing. So this is a current report filed by Moleculin Biotech Incorporated, a company that operates in a very competitive space biotechnology. And the main event here is a move that often signals a company is trying to become more attractive to investors, especially if its stock price has been low. Moleculin is enacting a reverse stock split. Basically what this means is they're taking a bunch of their existing shares and combining them into fewer shares. This is done by a vote of the shareholders, which happened back in August of 2025, and the board of directors got the go-ahead to figure out the exact details. The ratio that was decided upon is a 1-for-25 reverse stock split. That means for every 25 shares you currently own, you will end up with just one share. This split will happen on the 1st of December 2025, and this is not just a cosmetic change. This has real implications for how the stock trades and how many shares are out there. You see, before this split, Moleculin had about 51.6 million shares outstanding. After the split, this number will drastically drop to around 2.07 million shares. The total number of authorized shares, however, stays the same at 500 million. Now, when a company does a reverse split, it is not just the number of shares that changes. The value of each share is supposed to increase proportionally. This means that things like stock options, warrants, and other equity awards will also be adjusted. The price you have to pay to exercise an option or warrant will go up and the number of shares you can get will go down. But there is a special catch here for their Series E and Series F warrants. If the average stock price during a specific period around the split is lower than the warrant exercise price, the company's exercise price could actually be reduced. This is a bit complex, but essentially they are trying to protect the value of these warrants under certain market conditions. And what about those annoying fractional shares you might get after a split? Well, instead of issuing fractions of a share, Moleculin will pay out cash to shareholders for any fractional amounts. This cash amount will be based on the average closing price of the stock for 5 trading days before the split. This is pretty standard practice to avoid the complexities of FRI. Sectional ownership. To announce this significant corporate action, Moleculin also put out a press release on the 26th of November 2025. Now let us look at the numbers and see how this split impacts their financial reporting. This is where things get really interesting. Looking at the financial tables, we can see the impact of this reverse split on their earnings per S-share and outstanding shares. Let us take the year ended the 31st of December 2024, for example. Before the split, their net loss per common share was a negative $7.57. This sounds bad, but remember, this is per share now. After the 1-for-25 split, that same net loss per share becomes a much larger negative $189.14. This looks scarier, but it is just a mathematical change due to fewer shares outstanding. The actual dollar amount of the net loss, which was $26.048 million, remains the same before and after the split. What this really does is magnify the per S-share figures. Now look at the weighted average common shares outstanding before the split in 2024. There were about 3.4 million shares outstanding after the split. This drops significantly to just under 138,000 shares. This is the core effect of the reverse split. Let us check the 3 months ended the 31st of March 2025 before the split. The net loss per S-share was negative $0.63 after the split. This number jumps to negative $15.8. $0 again. The total net loss of $5.904 million is unchanged, but the per share value is dramatically altered. The number of weighted average shares outstanding drops from over 9.3 million to around 374,000. The story is consistent across other periods as well. For the 6 months ended the 30th of June 2025, the weighted average shares dropped from over 12.4 million to under 500,000 after the split. And for the 9 months ended the 30th of September 2025, we see a similar pattern. The weighted average shares outstanding went from over 20.8 million pre-split to about 833,000 post-split. This drastic reduction in shares outstanding is the main goal of a reverse stock split. Now there is a note here about retrospective adjustments to their net loss for the years ended the 31st of December 2024 and 2023. This means they have restated prior period results, likely due to a change in their accounting policy. This adjustment increased their reported net loss for 2024 from an initial 21.7 million to 26 million, and for 2023 from 29.7 million to 28.2. million, this is important because it means the reported losses were actually larger than initially stated. So let us sum this up. Moleculin Biotech Inc. is cutting down its share count by a factor of 25. This is often done to boost the per share price and make the stock more appealing to institutional investors who might have rules against buying very low price stocks. However, it does not change the underlying value or the company's net loss. It is more about perception and access to capital. Now, for my take on this filing, Moleculin is clearly taking steps to try and improve its standing in the market. A reverse stock split is a tool that can help a company avoid being delisted from exchanges like Nasdaq if its stock price falls too low. It can also make the stock look more substantial to investors. But it is crucial to remember that this split itself does not magically fix any underlying business problems. If the company is not generating revenue or showing a path to profitability, the stock price can still fall after the SPARP. The real story here is whether Moleculin can execute its business strategy and turn those net losses into profits. Investors should be looking at their pipeline, their clinical trial progress, and their ability to secure future funding, rather than just the number of shares trading. The company's direction right now seems to be focused on financial housekeeping and presentation rather than fundamental business growth. This is not necessarily bad, but it is a sign that they might be facing challenges in attracting investment. Organically, the biggest risk for Moleculin right now is whether this reverse split will indeed help them gain investor confidence and access capital more easily, or if it is just a temporary cosmetic fix. The opportunity lies in their actual biotech research. If they can bring a breakthrough product to market that would be a game changer, ultimately the market will decide if this move is a strategic win or just a temporary band-aid. What do you think about this reverse stock split? Drop your thoughts and predictions in the comments below. Did you find this breakdown helpful? If so, please give this video a like and subscribe to Corporate Decoder for more in-depth financial analysis. Don't forget to join our Discord community through the link in the description for more exclusive content and discussions. Thanks for watching, and we will see you in the next one.